It's Brian Preston, the money guy.
Should I rent or buy? This is on your FYP. You have this question and I'm here to help you. Somebody who was renting out an apartment during COVID and wanting to get a house, I came to the realization that getting a house would just be better for me in the long run. But it might not be the same for you, so listen up. If you're gonna be living somewhere, anywhere for 5 or plus years, consider purchasing whatever property you're living in. If you prefer to be more nomadic, consider renting. Now, often renting can be cheaper than purchasing a house or getting a mortgage because of the upfront costs. But if you can find a mortgage that's about the same, a little bit more, maybe and a little bit less in your rent, check it out. If you buy a home, it gives you the opportunity to build equity and get your money back. Whereas if you're renting, you can't really get that money back.
But you have flexibility, right? I don't disagree with anything she said. I think that was actually really well thought out and well reasoned. If you're going to be somewhere for a long time, buying can be better because you build equity. If you're going to be traveling or not be somewhere for a long one, renting, you might not build equity, but it's generally cost less and it gives you maximum flexibility. I kind of agree with everything she said.
I agree, but I will tell you there's this other component where institutional buying of houses that are squeezing the inventory. I'm just telling you.
I know where you're going.
And then interest rates are causing this to be much more expensive. She's spot on because it's easy to say, hey, if you're going to be in a place for 5 years, go buy a house right now. But is it the best time to buy a house when everybody's doing cash offers, they're waiving due diligence and other things that I would never tell anybody go buy a house with no due diligence because you might be buying a lemon. And I also think this is very much tied to geographic location as well. That whole location ties into this housing market as well.
But here's the good news. Maybe you are somewhere where you can get into a house. They're not waiving appraisals. The market hasn't run away from you. If you are a first-time home buyer, one of the great accommodations we afford you is rather than trying to come up with 20% down for that first down payment, if it's your first home, we give you some wiggle room because we agree with her. It does make sense to get on the equity train if it makes sense for you to get an equity train. So it's okay if you can only put down 3 to 5% on your first home. If you can do that and you're still able to do due diligence, get an appraisal, keep your monthly housing costs within 25% of your income, I do think that buying can be a viable option for you.
Here are 3 evil secrets of the financial industry only kept for the wealthy.
Ooh.
The industry does not teach you about debt because they'd rather you be at war with debt, rather than leveraging it to multiply your wealth as the rich do. You can grow your own family bank and pass it down to future generations. That way, neither you or your family have to ever qualify for a loan. Number 3, mutual funds were not made to make money from the stock market. They were created to make money off charging you management fees and your trust in them. Why don't they want you to know? The unknown creates fear. Greatest way to control the masses.
There was a few things that were off here. First of all, she's completely off when she says mutual funds are not designed to make money off the stock market. They're made to enrich the people through fees. That might have been true in the 80s, but in 2022, if you're buying mutual funds, especially like index funds and other things and ETFs, you better not be paying high fees. I mean, because you're basically getting direct access to the financial markets without cost and overhead.
The other idea of building up this private family bank, whether it's through an insurance product or whatever, she does not understand that we know 80% of millionaires are first generation.
Yeah.
But even if you're part of that 80%, statistically right now, by the second generation, 70% of that wealth evaporates and 90% by the third generation. It is really hard to build long-term family banks where your ancestral lineage have to borrow money if the second and third generation are just blowing through it because they're never taught how money actually works.
Because there was a lot here on the sexiness of how the wealthy use debt. I mean, we're wealth managers. We work with high net worth families. And I can tell you, here's some facts I know. Wealthy people don't come to us with a lot of debt.
Nope.
They're not at war with debt. They're just disciplined. They pay for their things. The people who are using debt to build wealth, it's on the latter part of their wealth building process, meaning after they have cash reserves, after they have basic wealth and savings, then yes, you can get into commercial real estate and other things. We do commercial real estate, and one of the biggest commercial real estate people in our area said, boys, I hope if you're getting into this, you got the pockets to cover it when it gets ugly, because it will get ugly, and you just better make sure you can cover it during those times. That's what's important with understanding debt.